Ladies and gentlemen, Greg Michalowski from ForexLive.com. This is a Forex Kickstart video where I take a look at three of the major currency pairs: the euro versus US dollar, dollar versus yen, and sterling versus US dollar. The PPI data came out a little bit later than expectations, and that has taken some of the pressure off of rates, and the US dollar stocks, at least in the NASDAQ index, have moved into positive territory. So let's take a look at the technicals leading those three currency pairs after that PPI report. Let's start by looking at the 4-hour chart of the euro versus US dollar. And if we take a look at this currency pair, there are a couple levels in play starting the trading day. One was this swing area. The swing area is defined by a number of different swing lows right here, forming a floor. We fell below that floor here, but then reestablished support against the floor here before moving to the upside. We came back down to that level in trading last week and again moved to the upside, finding resistance against this top side trend line before moving to the downside. Also, the 100-day moving average is in play up here before moving sharply to the downside yesterday after that CPI data. In trading here today, the ECB kept rates unchanged. And we wait the comments at the press conference from ECB's Lagarde. But the euro versus US dollar moved below this swing area and tested the 61.8% retracement at 1.07133. But the PPI data has now pushed the price back to the upside. We currently trade at 1.07426. So we're back above this swing area at 1.0722 to 331. If we're able to stay above that level, then we could see a rotation back to the upside, with my focus being around the 1.0760 as the next target to get to and through, to kind of give the buyers some hope that there's the bottom is in place. Get above that level and we look toward the 50% retracement at 1.07946. That's of the move up from the, well, it goes back to October to the high price that we saw in December. And again, that level comes in right around the 1.08 level. The level also corresponds with this swing area here where we traded above and, found support against the 108 level here and here and here and again here before breaking below the level here and moving back above. And again, we tried to hold support against that area here before moving to the upside. So that level is a key level on the top side, key barometer for traders going forward in that currency pair. Taking a look at the dollar versus the yen, this currency pair moved sharply to the upside yesterday, and in the process moved above the 2022 high price. That's this high right here. Also moved above the 2023 high price. That's right here, and also the 2026 or 24 price. That's right here. All those levels come between 151.91 and 151.967. The break to the upside took the price up toward around the 153.64 level. Taking a look at the hourly chart, the price moved to the upside. Let me switch this up. Came up again to the 153.28 level. That was the actual high price, and this trend move to the upside has the 38.2% retracement of the move higher at 152.70. Getting below that level would give sellers some confidence, or at least some show that the sellers looking for a move to the downside. Also, the 50% retracement 152.52 would be in play as well. If the price can get below the 50% of that last move to the upside, this trend move off of the CPI, then that would give sellers some hope that the price has reached its high. On the downside, we still have the rising 100-hour moving average, which is moving up toward that area, but still a bit off at 152.048 as a target to get below if the sellers are to stay in control. That will take some time, however, for that moving average to move up. Given the sharp move to the upside, it's lagging behind. So be aware of that. But that would come if we see some more of a sideways market. But what we may have done with the PPI data today is at least give a more sideways consolidative trigger for traders to grab onto. We'll see if that up and down price, if we see more of up and down price action with 38.2, 50% of the last move to the upside holding support. Finally, let's take a look at the sterling versus US dollar, and again we'll look at the 4-hour chart. And when we look at this currency pair, the price fell sharply yesterday, and in the process extended below these lows from here and here were the last two low levels before the market moved higher, but we did hold support right at this lower tier. This is a 2024 low price of 125.17. The price has since moved back to the upside, helped by the PPI data today, and that has taken the price above this swing area through here at 125.34, and we'll look toward the low price from a few weeks ago at 125.74 and the 200-day moving average at 125.84 as the next key targets on the top side. If the price holds against those levels, then the bias still remains to the downside here for this currency pair. Remember the ubiquitous red box that has been the value area going all the way back to this day remains up above at 125.94. That's the low of the red box. And if the price can stay below that level, and also the 200-day moving average, the bias still remains more to the downside. But it's interesting, we still came down to the low price from 2024 and found support buyers. So that may dissuade sellers from pushing lower. At least there's something to lean against on the downside. So there you have it, a look at the three major currency pairs. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.